I'm Sean Aylmer, and this is Fear and Greed's Sunday feature interview. I'll be back again tomorrow with another weekday episode of Fear and Greed, the normal mix of business news and interviews that sets you up for a successful day. In the meantime, enjoy our Sunday feature interview. As the country continues its journeys through the COVID-19 pandemic, and hopefully beyond, one area of public policy that will receive increasing focus is the tax system. Now, the three major arms of government policy to run the economy are monetary policy, fiscal policy, that's taxing and spending, and industrial relations or wages policy. The Reserve Bank looks after monetary policy, and with interest rates at record lows, it's fewer options left. The government has already said it wants to reform industrial relations, though it will take time. Tax policy is what will be expected to do much of the heavy lifting over the next couple of years to help not just emerge from COVID-19, but also start repaying the debts that we're accruing at the moment. To talk us through that this morning, we have Professor Robert Breunig, Chair of Tax Policy and Public Finance at the Tax and Transfer Policy Institute at the Australian National University in Canberra. Welcome, Professor Breunig.
Thanks, Sean. Thanks for having me on.
You've just completed a review of taxation on savings in Australia. Can you give us a snapshot of what it found?
So what we found is that currently the way we tax savings is very uneven, so that there are some forms of savings that are taxed very heavily and some forms of savings that are not taxed heavily at all. Now that might be okay, but it also turns out that in practice, the way that works is that it's often the forms of savings of wealthy people that we tax very lightly, and the forms of savings of less wealthy people that we tax very heavily. And so in addition to being very inconsistent, our system actually looks quite unfair. And our taxation of savings puts a heavy burden on people actually at the lower end of the income distribution. So it violates the kind of sense of fairness that we usually think about, that wealthier people should pay more tax.
Now, I'm going to ask, how do you define savings then? That's probably a good starting point.
That's a good question. And we define savings as basically anything that people do with money that they've earned that they're then going to put into some kind of vehicle that they're going to use to store that value for the future. So it could be putting money into a bank account. It could be buying a house. It could be buying shares. It could be putting money into superannuation, or it could be buying a rental property. So those would be the main things, the main ways that people save money in our society.
So going from there, if there's an inequity in terms of effective saving rates between higher earners and lower earnings, can you expand on that a little bit?
Basically, there are two forms of savings that we tax very lightly. One of them is owner-occupied housing, and the other is superannuation. So owner-occupied housing essentially is completely tax-free in Australia. We have no land tax. We have no capital gains tax on owner-occupied housing. And if people pass away and give their housing to their children, we don't have any kind of estate tax that would tax the value of that housing. So what we've seen as a consequence of that is we've seen a tremendous amount of wealth go into owner-occupied housing. So about 40% of the wealth of Australians is held in owner-occupied housing. And obviously the more expensive housing is held by wealthier people. So that's one way in which there's a big tax break for wealthy people. Superannuation, we give people a tax break, partly to compensate them for the fact that they're not going to be able to touch that money for a long time. But the way we give that tax break is we just say for the first $25,000, we just say we're only going to tax you 15 cents if you put the money into superannuation. Now, if you're working in a coffee shop and you're paying 19 cents on the dollar of a tax rate, being taxed at 15 cents is saving you 4 cents. I guess that's better than nothing. If you're making over $180,000 and you're paying 47 cents on the dollar, then only paying 15 cents of tax is saving you 32 cents on every dollar. That's quite a substantial savings. So the way that we actually encourage superannuation savings creates a very large tax break for wealthier people relative to poorer people.
So what's the solution? In superannuation, there's a great reason to incentivize saving for the future. Housing's probably less so. How do you resolve the issue of inequality?
Yeah, so I hope it's okay if I back up a little bit,
Yep,
Sean.
yep, please.
I was in a wine shop in France one time, and I said to the owner, I said, tell me about this bottle of wine. And he looked at it for a second and he said, well, 3 million years ago. And I thought it was a brilliant way to begin a story about 750 milliliters of liquid in a glass bottle. So I'm not going to quite go back that far, but when we start to talk about changing the tax system, I guess there's two things that I like people to keep in mind. One is that we have a tax system because we want to pay for the things that we want government to provide to us, right? So we like education, we like healthcare, we like the government insuring us from bad events. You began the program by talking about COVID-19 and the fact that the government is having to spend a lot of money to try to minimize the effect of the pandemic. And these are all good things and they're things that we want. So then we design a tax system to pay for those things. And when we think about that tax system, we think that it should be efficient in the sense that we don't want to harm economic growth. And we think it should be fair. We think how we pay for things should be spread in a way that's fair across the society. And fair, of course, can mean different things to different people. Fair often means I want someone else to pay for it instead of me. I guess more acceptable views of fairness are sort of things like two people who are roughly the same level of wealth, who make the same amount of money, should pay about the same amount of tax. That seems fair. And we think that wealthier people should pay a higher share of tax than poorer people. And part of the reason we think that is that a lot of what society provides is more valuable to people when they're wealthy. So, for example, police protection is very valuable if you're a homeowner. It's less valuable if you're homeless. We also think that part of success in life is luck, and we want to share that luck around. So when we think about tax reform, the real issue is what is the right mix of taxation that achieves this goal of paying for what we want, encouraging economic growth, and doing that fairly. So with that in mind, I'll take a crack at answering the question of what we might do to fix it. So whenever you change the tax system, you want to think about doing things that fit with other aspects of the tax system. In terms of savings, our proposal is to do something that would be much simpler than the current system. What we propose is that all forms of savings should be taxed at a very low uniform rate. And in the paper, we discuss tax rates of between 5 and 20%. And we also calculate that if you had a tax rate of about 7%, you would raise just as much money from the taxation of savings as the current system. So that would mean that if you got interest from a bank account, you would pay tax of 7%. If you sold your house, you would pay tax of 7%. If you earned money in shares and got dividends, you would pay a tax of 7%. What this would do is it would, so first of all, it would simplify taxation considerably. Second, it would eliminate a lot of the kind of tax planning that people currently do. So a lot of people use family trusts, and then they distribute the income from savings to people in their family who have low personal income tax rates. Our system would make that irrelevant. It would also make imputation credits irrelevant. So it would actually kind of be a major redesign of the system that would simplify, but actually get rid of a lot of the problems that people have identified.
The 7%, if you can raise the same amount of revenue, now you will actually raise some more from people selling their family home, so that's a plus side, though a lot less from some other areas. Is it because you're incentivizing people to save more, so more people will save, and so there's a boost from that as well? So it's both sides?
So the 7% doesn't, that's actually a really good question. And in fact, when we calculate the 7%, we don't incorporate any behavioral response. So this would just be the overnight response. But you're right that lowering the tax rate on savings should encourage more savings. What the research shows is that, it appears that in society there are kind of savers and non-savers. So you have some people who will save a lot even if the tax rates are high. Other people won't save even if tax rates are low. But tax rates seem to affect the composition of savings quite a bit. So one of the problems that we have in Australia, and I guess this gets into the relationship between the tax system and the recovery from the pandemic, is that our current tax system really heavily favors people putting a lot of money into housing. And it's not clear that that's where the economy needs investment. in terms of creating new jobs, creating innovation, creating entrepreneurship. So we do think that this kind of policy should actually have a positive effect in that dimension as well.
Okay, so we're talking about tax rates on savings. The other big revenue streams for the government, personal income tax, obviously, company tax, GST. Should a change in savings would certainly impact those things, or certainly the incentives towards different parts of the tax system. Do you think we need reform in those areas as well?
I do think we need reform in those areas as well. One of the common criticisms, a criticism that I've made, but many others as well, is that the Australian tax system is very heavily reliant on personal income taxes and corporate taxes relative to other countries. One of the problems with relying on those two forms of taxation is they're directly taxing economic activity. So we tax you if you make money as a company, we tax you if you make money as an individual, and we think that taxes have behavioral effects, and we think it makes it less attractive for people to undertake those activities. Australia doesn't rely much on taxing land or taxing consumption, and we think those types of taxes have fewer negative effects on economic growth. So we're going to need to grow out of the pandemic, and so a shift away from those taxes that are on corporate and personal income and a shift towards taxing things like land or consumption is probably a good change to the tax mix that we currently have. I guess the other thing that people often don't think much about is that there is a lot of opportunity in our system for people to reclassify one type of income as another type of income. And so if there are very large gaps in the tax rates between personal income and corporate income, for example, it encourages people to reclassify personal income as corporate income.
Yeah, it's fascinating. When you're talking about consumption tax, that is a GST question, primarily in Australia. GST is a tough one for the politicians to increase. And to be honest, I think most experts suggest that the GST should be at least broadened and potentially increased. Are there other types of consumption tax that we could think about? Only because GST is so hard.
Yeah. So the primary other types of consumption taxes that we currently have are excise taxes. One of the problems with excise taxes, particularly the way we charge excise on petrol, is that as we go forward and we get more and more electric cars, those cars will be using the roads that are supposed to be funded through petrol excise tax. So we probably want to think about switching from our current petrol excise tax to taxes around roads and congestion that maybe will better capture the value and that people are getting from those roads moving forward as they use electric vehicles. So, for example, we might want to look at things like congestion charging, and we might want to look at things like taxing cars based on the amount of kilometers driven every year. And we could easily do that because modern cars now have computer chips in them. We know when they're driven, we know where they're driven, we know how much they're driven, and you could be charged an annual registration fee based upon those things. And that would better align the kind of costs that people are imposing through driving their vehicles with the tax that they pay.
Are there anywhere around the world that you've seen that has done a good job on that sort of thing?
So Singapore strikes me as a country that's done a good job on that. They've had to. You know, Singapore and Australia are obviously very different places. Singapore is an island city-state that doesn't have a lot of land mass. Australia is a huge continent where there's lots of room to drive and not impose costs on people. But, you know, the Singaporeans have put very high entry charges on buying a car to control the number of cars on the road. And then they have a lot of their main roads are toll roads, and the tolls vary depending upon how much traffic there is on the road. I don't know if you've seen this in Singapore, and many of your listeners probably have, but for those who haven't, when you go onto the freeways in Singapore, there are these big signs telling you exactly how much you're going to be charged and how much you'll be charged if you wait a half an hour or an hour to drive on the road. And so they use pricing to encourage people who can change their travel times to move to different times when there's less congestion.
And finally, how has your paper been accepted? It's been out for a couple of weeks now, I think 20th of July, is that right?
Yeah.
What's the reaction been?
It might be a difficult point in time to put out a paper on the taxation of savings because there's a lot of focus on other things like lockdowns in Victoria. But the sense I've had both from people in the public service and from politicians is that the kind of proposals we're making are the kinds of things that are actually concrete improvements to the system that can be implemented. And in the report, we offer some kind of, interim steps towards getting closer to the kind of system that we suggest. And I sense there's an openness at the moment for change in our system and for tax reform. As you said at the beginning of the talk, the pandemic is going to be very costly for Australia. There is a bit of good news. I mean, the good news is that we went into this pandemic with a very good fiscal situation. We were almost at budget surplus. We don't have a lot of debt compared to other countries, and interest rates are very low. So it's actually a good time for us to spend a lot of money, and we can borrow it, and it'll be pretty cheap to pay that back. But we will have to pay it back someday. And I guess the other part of the problem with our tax system is that the way we tax, because we don't tax a lot of the accumulated wealth that's held by older people, but we tax a lot of the economic activity of working people, the tax burden for paying for COVID-19 is going to fall very heavily on young people. And I think it's a legitimate question to ask whether that's actually fair or not.
Professor Breunig, thanks for talking to Fear and Greed.
Thanks for having me on, Sean.
That was Professor Robert Breunig, Chair of Tax Policy and Public Finance at the Tax and Transfer Policy Institute at the Australian National University in Canberra.